Hi, I'm Virginie O'Shea, founder of Firebrand Research, and I'm here with Matt Gill, Head of Securities Processing at FIS's Capital Markets business. And we're going to chat today about some of the dynamics on the sell side in today's markets. One of the sort of defining factors at the start of 2025 has been the volatility in the market, and we've seen a lot of challenges related to that. So welcome, Mac. Certainly you must have been seeing some challenges related to equities and fixed income volatility within your client base. Perhaps you can sort of chat to us about what you've seen and how it's impacted your clients.
Definitely. Well, look, as they say, we live in interesting times right now. But look, we all love volume and liquidity in our industry. And I think, clearly so far into 2025, it's been a terrific, operational resilience stress test for us. And I think, and frankly, the industry has passed, I think, with flying colors. We've not seen the kind of liquidity problems in the equity and fixed income markets that have accompanied, prior volatility events. And I think a lot of that is due to, ongoing preparation and ongoing, improvements in our overall industry. And I think that it's interesting too, if you look at the markets here in 2025, we've come a long way from prior years and prior major liquidity events. We have a much higher retail involvement. Obviously, that includes, traditional equities, but also in the crypto markets, which has added an extra element. And we've seen a lot more engagement, and yet, despite that, again, I think we've come through it as an industry with flying colors. I think another thing, particularly in the North American context, is that we're pretty much a year in from T+1 and a shortened settlement cycle, and a lot of market participants point to the fact that has really helped liquidity and helped the smooth operations of the markets in this type of environment. So I think that's another real positive. So I think that's that's a good step. But clearly, this is the new normal for us here in 2025, and we're very focused on preparing for the new and future stress tests and making sure that we're preparing for more industry growth and preparing for the future. So it's been an interesting start to the year, and but I think a very positive start for those of us that are supporting the industry and market participation.
Sure. Certainly, I think the investments in automation have been very, very helpful in terms of riding through the scalability challenges out there, right? Now, the topic of competitiveness has also been very popular this year. So we've seen in the EU, we've seen the Draghi report last year and a lot of discussion at the EU level on competitiveness of the region. We're seeing similar moves in North America, particularly the US market, changing dynamics there with the new administration. And in Asia, there's been a lot of discussion in Singapore, in Hong Kong about how to make those markets more competitive. And now that's also had a big impact on asset classes and the mix there, and lots of interest in digital assets. So what kinds of things are you seeing from your perspective on the competitiveness standpoint?
Well, look, I mean, there's never been, I think, more change in our post-trade market than what we're seeing today. I mean, I think for many years, frankly, decades, the post-trade technology market was somewhat static. We had systems that were fit for purpose for a certain time. And but that obviously has moved very quickly. And that's really kind of a 2015 view of the world. I mean, here we are in 2025, and we have a technology stack generally for the industry that is no longer fit for purpose and certainly not ready for 2030. And so, we are really, it feels like this tipping point, given all of the as you say, digital assets, much more of a globalization of our market structure, a lot of regulatory change where things really have to move on. And that's really the focus that we have now in the industry. So with all that, there's the old adage that things take longer to change than you think, but then change faster than you expect. And I think really the three areas of major convergence that we're seeing, one is obviously crypto. And frankly, also the extension of a wider retail involvement in the markets. That's driving a much broader involvement, it's broader exposure to the markets, and also just increased volume and complexity with new crypto markets coming up. The second area of really interesting change is the broader digital asset space. And it does also feel like we're reaching, after a number of years of investment in sandboxes, that we're reaching a tipping point when it comes to tokenization and the use of stablecoins. And that will have broad impact on all core markets, but especially, as we're seeing some of the newer, less liquid markets on the periphery, but that will only grow as we move on. The other interesting development over the past while is really the embracing of digital asset frameworks by the CSDs. And so recently, again, movements such as the DTC's investment in collateral management, there are a range of different investments going on with that market infrastructure now around the world that are starting to bear fruit. All of that is impacting and will have impact on global markets. And the third area broadly is, of course, infrastructure. Core infrastructure around the embrace of cloud, and that's an acceleration of the use of cloud computing in our post-trade space, and of course, leveraging AI. And so in order to move in this direction, what we're seeing right now is the whole industry taking a fresh look at their core infrastructure and trying to get their arms around the fact that the industry needs to move and modernize infrastructure in order to be able to leverage a lot of the new, enabling technologies that come from. We all know in our own AI journeys that it's all about the data. And our organizations, our clients, and our industry needs to remember that at heart, we are all data management organizations. It's as simple as that, if you look at it from that lens. And so the ability to manage your own firm's data in real time, have access to the golden source of your data, and then be able to provide that to your own clients, that capability, is incredibly important, especially in the context of new AI models, where again, if you're not managing your data correctly, then you're not providing an environment for true AI leveraging. So I think we're moving towards investment and an understanding that in order to move into the next phase, core infrastructure, again, around cloud and AI, needs to be at the top of the list. So these trends are all converging and coming together into a massive sea change.
Sure. And we're at a very sort of high level in terms of maturity around cloud, I think, over the last 10, 20 years. AI, we're at the start of that journey, aren't we? So definitely going to be interesting to see what happens over the next 5 to 10 years.
Well, absolutely. And again, remember that much of our industry, especially North America, is still running mainframes. And so we're still in an era of batch processing. And so in order to leverage data and to leverage AI, again, we need to be thinking about how we move the industry into an era of real-time, modern, event-driven systems that can interact and manage data, in a much more meaningful way. And again, that is a sea change. And again, whether or not we're talking about AI or we're talking about other market changes that are more focused around things like 24/7 trading, which is another interesting trend that we're seeing, we have to have the infrastructure that can not just tick the box and get by through micro batches, as many organizations have looked at doing, but in terms of true real-time, event-driven processing. That's the challenge and the opportunity for the next 5 years.
For sure. 24/7 trading is a very big topic that we could spend probably an hour talking about in terms of all the challenges there, but certainly an important one to raise. And now we can't talk about post-trade without talking about T+1 and the shortening of the settlement cycle across the globe. In May last year, we saw the North American markets and a few other markets at the same time shorten their settlement cycles. A lot of lessons were learned during that process. We're still learning some lessons, I think. But we've got the prospect of Europe moving by 2027 in October, and we've got some other markets like Australia looking a little longer out, maybe 2030. So as an industry on T1, what do you think the main things that people should be focusing on from your perspective?
Well, look, I think it's been a very interesting example of modernization. And again, very successful. As we talked about, its recent volatility, the market's been interacting and been operating very efficiently. And you look at some of the more structural changes, like the U.S. in particular, the NSCC's improvement on clearing margin down by 25%, which is a $3 billion savings. I mean, we're talking material improvements to the industry and for end investors. However, I think if you look at the actual core of how the U.S. or how North America got through T1, the regulators really wanted to focus on automation. They really wanted to focus on making sure that we accelerated allocations, confirmations, trade matching, how fast we had incident resolution. However, a lot of organizations invested in people to get through that, given the short time frame of having to get through that. And again, a successful outcome, but not as many firms focused on the future as I think could have. And I think there's a lot of interesting conversation right now in North America, but with firms again looking ahead. T1 is live, but how do they look ahead to modernizing their infrastructure? And I think that's really the key takeaway for a lot of firms we're talking to in Europe and the UK and other jurisdictions, is they've taken that lesson. There is time in 2025 and 2026 to prepare for the 27 go live, and they're looking at modernizing their core infrastructure to not just tick a box on T1, but actually to prepare for T1, future movements perhaps to a T0 environment, but just generally get a much wider benefit from that investment and from that approach than ticking a box. So I think that's going to be really driving a lot of organizations, this year and next year as we move forward into a 2027 environment. But clearly, the move overall for shortening settlement cycles is a positive. The industry harmonization around the world can only benefit the markets and liquidity, and it's something that I think has really catalyzed the industry overall. Very positive movement.
Sure. And everyone wants misalignment to be as reduced as possible. So harmonization certainly is a desirable goal for everybody in major markets. Now, another common topic at the regulatory level, globally, I would say, has been operational resilience. And we've seen in Europe the Digital Operational Resilience Act come in January this year. Certainly, a lot of preparation was involved in that. But we see other similar regimes across different markets as well. And there's already been guidelines in Singapore for some time on the topic. Now, one of the parts of operational resilience is internal IT, making sure that you understand all of your supply chains, understanding any impacts with regards to in-house tech and the dependencies you may have. How has FIS approached the topic of operational resilience?
Resilience is absolutely top of the agenda for FIS. And one of the benefits of having the global scale that FIS has, is the ability to continue to invest not only in our own infrastructure, but also have the types of relationships with our key partners, such as AWS and Azure and other infrastructure providers, to make sure that we're working in close concert and making sure that we have that real focus. So that is top of the agenda. The other interesting thing, to the point about resilience, is looking at helping our clients with simplifying their estate. We look at a lot of organizations, and really over time, they've grown quite a complex post-trade architecture. And that's frankly difficult to manage and operate when it comes to resilience. And so again, one of the conversations we have with the industry is taking a look at how we can simplify and consolidate this patchwork of post-trade operations, whether or not siloed by asset class or geography, and helping them bring together that kind of operational flow on one, global standard platform approach. And I think the benefits of operational resilience you get from that, are manifold. And that's again part, all of that backed up by kind of the global standards that we have at FIS on resilience. That's a combination that we think adds a lot of value to our clients and to the part of the industry that that we help support.
Sure, and given we're sort of getting more and more digital assets, I think the focus on operational resilience can only get stronger over time, given cybersecurity and all these things too. Definitely. Now, sadly, one of the recurring things that every COO has to think about is cost control. And as the world gets more complex and we've got more and more challenges related to market infrastructure change and regulation, costs can escalate quite quickly. So looking at it from the perspective of efficiency, cost benefits, sort of what kinds of advice do you have for the industry on that front?
We see so many cost management opportunities right now in the industry, and really, again, with the common theme of really approaching and looking at tech stacks with through modernization. It is amazing how much of most organizations' budget is allocated every year to maintaining their legacy systems and their legacy stack. And so there really is so much opportunity over time to really manage that through and really be looking at that modernization, but also through consolidation, as we talked about a little bit earlier. I mean, again, consolidation of systems and modernizing of core architecture are fantastic cost management opportunities And I think every organization has to have that plan and has to be, frankly, radical right now in that cost management profile, given all the other challenges and opportunities that are out there. But I think the competitiveness of our industry, given the technology changes that we've been talking about, has never been higher. And so there's an absolute necessity for cost management. But I would also argue that what's changed over the last while is that when we look at technology and how firms are looking at their stack, it's not just about cost. It's about being able to support new revenue opportunities. And I think that's been an interesting dynamic over the last couple of years, is that when we look at post-trade technology and post-trade operations, collectively, we really need to be able to support new revenue ideas, whether or not we're talking about digital assets or getting into new markets, more retail, being able to support more retail capabilities. It's really that position of being able to support, a top line growth where in an environment where in post-trade, it's really becoming more of a technology arms race. Again, we're not in this static post-trade environment anymore. Things are evolving very, very quickly, and with new entrants into the market, and not just on the technology side, but also on the financial institution side. And so again, cost is there, but it has to be balanced as well with being prepared to support revenue growth. I think that's a very exciting time for all of us, where COOs and heads of ops and really need to be having both hats on and helping drive the agenda.
Sure, and certainly that role of the COO, role of head of operations is changing as a result of that, and that's certainly a positive thing, because I think just focusing on cost control is quite a depressing job, let's face it. But thanks very much for your insights today. Very interesting in terms of all of the different challenges COOs are faced with. It's been a pleasure talking about some of the things that everybody needs to think about going forward.
Thank you, Virginie. Great to see you.